Overall, utilizing the incredibly useful POI box tool significantly assists you in precisely locating the specific point of interest. Our established and recognized term for POI. POI stands for point of interest, meaning specific areas that are truly worth analyzing and carefully examining for us. It's an area where you see reactions. In general, we have three main types when using POI. The first setup you need is the BOS setup. The second setup is the QM setup. And the primary third setup is indeed the specific LQ configuration. I'm going to explain each of these setups to you. First, I'll draw its schematic. Then I'll explain its conditions, and we'll go through an example. Alright, let's start with the BOS setup. So we're going to use the BOS setup. Usually in the market, for a BOS to form, first a BOS is created. After the BOS is formed, actually these BOS levels are hit, and then in a certain concept, in smart money we say, under certain conditions this is a valid BOS. If you look at any BOS, not all of them are BOS. I'm going to draw a BOS box to define its range. So this is the BOS range, meaning from here to here is the bearish BOS range. Now, as you can see, when I draw a POS, I have three legs. The first leg is the one that forms the downward move, and by that I mean this area to this area. We call this leg A. In fact, here is leg A, from the start of the box to the end of the next leg. There's a corrective leg, which in bearish BOS should always appear as an upward move. We actually call this the corrective leg, and to have a rule among ourselves, we label it as leg B. And the last leg, which starts from the correction and continues with the next move. I only consider up to this point, meaning I don't deal with what comes after the box or before the box here. For us, BOS is in the form of legs A, B, and C. Well, the reason for this naming is that when we're looking for our area of interest, the POI, point of interest, we search for it. The area that actually has trading value is important to us in two places in the market. First, the events that happened in leg A. And second, the events that happened in leg C. Or in other words, the events related to the entire BOS structure and its form. Each BOS has a price zone, which in the smart money style we used to call the order block, and we actually identify the order block. We said to use the candle of the opposite color up to the point where we see the close. But here we no longer use those rules. You will use the POI tool, and the POI tool is set in such a way that it displays this zone for you at the point where it forms here. The same order block zone that the system identifies, and it extracts a zone for you, which we call POI or Main POI. By Main POI, we mean the POI that is almost equivalent to the order block. In every bearish RBR, in every bearish BOS, should we check this same RBR? Usually we check the RBR that is in the leg. By leg, he means. Meaning from here to here, this is the leg. If we look at this range on a smaller scale, we might see another RBR. The other RBRs that form here, we actually call them Trick RBRs. We refer to these as Trick RBRs. Because the price has made a trick move here once. The price went up, took these out, and then dropped, and this area we have here itself has a POI. And this POI is actually a Trick POI for us. So basically all the BOS, whether bullish or bearish, have a kind of Trick POI and a kind of Main POI. That's why we take trades from here. And to understand which RBR works, my general approach is this: its structure is like this to figure out which of these BOS is more suitable for trading. Usually our POI itself, our BOS itself, has a BOS parent, meaning before this BOS there is also another BOS. Usually in our setup, it's better to look for trade zones where this hasn't happened yet. That is, if this has already happened, It's likely that both POIs will be invalidated and the market will react from here, and we usually prefer the BOS to be sized in such a way that it has taken out the buyer, meaning this should be higher and the price should be within these zones. In this case, we actually trade the main POI. Where is the target? For the target, right below each box you see here, there is another POI. We have that, which we call it. That is, this is the zone you see here. This is the main POI. These are the main POIs for each RVR, but if you look a bit more closely, you'll see. Every BOS you see corresponds to a box like the one above, and for the size of this box, there is another box present, which is below the chart, meaning this is where your first target should always be, the one that's green in color, and that's what we call it. The main POI is the one that's in the opposite direction. If your RBR is bearish, it's positioned lower. We call it the POI, actually QML POI, and your first target. For the trade you take on the main point of interest POI area, you should definitely aim for your target right here. So your very first target, target number 1, meaning I typically enter trades at this precise location, set my stop at this specific edge, and this entire area then becomes my initial take profit TP1. This is indeed your take profit one. And now, wherever the market has reversed from, let's say, for example, when you wanted to take the trade, the market has reversed from here. So from here, I took this order and it got activated. This becomes your TP1 and your TP2 is this whole area here. I can consider this as the TP2 zone as well. This becomes TP2. So if I want to trade with a trick, what does it look like? In the case of tricks, there are also rules, meaning every trick, each one is considered an RBR in itself, a bearish RBR in another context. For the lower zone that we see here, again, we have a POI. Here, if you wanted to take this trade, your first reliable target is right here. The edge of the QMPO, your trigger. Basically, every BOS has two sides on its own. The main QM on a larger scale, the main one, below it again, is a QM. So overall, you always have a trade on the main POI, a trade on the trigger, and RBRs whose trigger has reached the main point. POIs usually have a better win rate. Alright, this is setup number 1. Let's go to the chart. I showed you an example earlier. For example, in Aussie, just take a good look at these particular instances and not over here. If you so desire, the current setup has clearly given a strong signal, and you can distinctly observe that I had a very bullish RBR formation right here and yet another significantly bullish RBR formation over here. If a truly bullish RBR has indeed formed, we absolutely need to come and meticulously find a final decisive point somewhere around this specific area. To take a trade, well, now if I want to use the tools, it's enough for me to just come here. The POI box tool, they also place the POI on the chart, and when you put the POI on your chart, when you want to start, it asks you from where to where you want to analyze. You need to draw the first line, which we call X1, and it's written here at the bottom of the screen. Place the X1 level of the POI box time frame here, and set your X2 line as well, so that it can draw from the end of your chart up to this area for you. That is, the relevant area. By selecting your correct POI, as you can see, the mode should be set to main BOS, meaning I only want the main BOS to be drawn. Now in your main BOS, do you have two boxes? The lower box is the main POI. If you want to see its QM, that's the upper part. We call that upper POI, the QM. If you want to see both, set it to BOS mode, which will show you both the lower and upper ones. Now, since I just want to see the main POI for now, I select main.py. For now, I don't want the trick either, so I'll just take a trail here. This becomes my entry point here, right? SL, ME, and if I activate this man and tell it to show both, up to here this becomes my target. That means I'm supposed to enter here, and this becomes my first target point. Now, where is the second target? The second target is where the price has bounced back from. That means I'm coming from here towards the price. I'm coming from these highs. I'm moving towards this, so target 1 is here and target 2 is here. Here, I am supposed to take my very first profit target, or TP, and over here is basically my second subsequent profit target. Usually I consistently use the initial profit target to carefully close a significant portion of my open position, ensuring a secure and strategic exit from the market. For example, I close 50% of the position and let the rest run. I do this when I'm managing risk. So when it reaches this point, I close half of the position. Then I move the stop loss. I set it at the entry point and let the second TP play out unless, well, according to the capital management system I have, the first trade should be, I let the first trades go, meaning these trades that are set on a specific target. For example, let's say we want to make 1% in a day. If today the total profits I've made have reached 1%, I usually let it hit the first TP and don't close any more of the position, because at that point I know the market can move. So now, if you look here, the market activated the order at this point, and now our take profit one has been reached. TP1 has been activated, and if I had set it to risk-free, it would only have been risk-free here. It definitely would have hit the risk-free, and I wouldn't have been able to increase my position size. But here, if you notice, without setting it to risk-free right now, take profit 2 was also reached at this point. So if you enter here, you can close your take profit positions accordingly. Don't move your stop anymore and just let it be for your take profit 2. In this situation that's happening here, I'll delete this setup again so you can see this area. Suppose this is the case. You analyze it for us, meaning we'll trade this zone again. Just one candle needs to be confirmed. Now these are our armies. All I needed to do was hide this so that only the main pivots are visible. Now if I turn on the trick, that means I take this point as the trick. The trick that existed is this zone. As you can see, I can also see the box above the trick. My trick display, the trick itself has two zones, one below it and one above it. As you can see, the order was triggered here and hit the TP up to this point. That means the first TP where I can exit. Usually the tricks are exactly what I mentioned for them. We trade tricks that are in the lower box, meaning the lower part of the chart. But these don't have any issues. For example, you can take a trade here, say a long position. Could you have taken it from this area to this area? Should we trade all the tricks or just the main trick? Up to this area, which in the first trade is 1.96, you can trade both the main